If you've been keeping an eye on your investments, you've probably noticed that silver has had an absolutely wild year. Prices just went on a tear, and it left a lot of people scratching their heads asking, what on earth just happened? Well, today we're going to play detective. We're going to look at the clues that led to what many are now calling the Great Silver Squeeze of 2025. So, let's dive right in.
First things first, let's just talk about the sheer size of this thing. In just 1 year, the price of silver shot up by an incredible 138%. Now, that's a huge move for any asset, and it tells you right away that something really unusual was going on behind the scenes. And to put that number in perspective, a report from Goldman Sachs pointed out that this was the biggest jump in silver prices since 1979. Now, for those of you who remember 1979, that was the year the famous Hunt brothers tried to corner the entire silver market. Anytime you're hearing comparisons to an event like that, you know this is a pretty big deal.
So, where does our investigation begin? Well, it turns out all roads lead to London. London is the global center for physical silver trading. So to figure out this price surge, we first have to solve the mystery of what was happening in those London vaults.
Okay, so here's our first major clue. A huge amount of silver suddenly left the building. There was a lot of talk about the US putting some big new tariffs on imported goods, and silver was on that list. Fearing a tax as high as 50%, businesses didn't really wait to find out what would happen. They just started moving massive quantities of physical silver out of London and into the United States for safekeeping.
And you can actually see that happening right here on this chart. See that dark blue line? That's the amount of silver sitting in London's vaults. And look at that. It just takes a nosedive as all that metal was being shipped across the Atlantic. This one event really set the stage for everything that came next.
And here's the immediate result of that. With so much less silver physically in London, the cost to borrow it, what the pros call the lease rate, it just shot through the roof. This chart shows that spike, and for people in the market, that was like a flashing red light, a huge signal that a shortage was brewing.
Now for our second clue. At the exact same time that London's silver supply was getting thinner and thinner, something else was happening. Investor demand suddenly took off. People started pouring money into those funds that are backed by physical silver. You know, the ETFs.
So you've got these two powerful forces colliding. On one hand, you have a rapidly shrinking supply of silver in the world's main trading hub. And on the other, you have this sudden wave of new buyers. Well, that created the absolute perfect storm for what's known as a liquidity squeeze.
So what exactly is a liquidity squeeze? You know, the easiest way to think about it is like a run on milk at the grocery store right before a big snowstorm. When the shelves are full, one person buying a gallon doesn't really matter. But when there are only 3 gallons left and 10 people are trying to grab one, well, the price can suddenly go crazy. That's pretty much what happened to the silver market.
Let's put some real numbers on that. So before all this started, in a normal market, if investors bought, say, 1,000 tons of silver, it might nudge the price up by about 2%. But in this new squeezed market, that same purchase suddenly caused a massive 7% jump in the price. Every little move was hugely amplified. And this chart really shows you that squeeze in action. The blue dots, that's kind of the normal market. But look at the red dots. See how much steeper that line is? It just means that once the squeeze started, the market got way more sensitive. To put it simply, every little ripple in the market started to feel like a tidal wave.
We're about to get into what all this means for the future. But before we do, if you're finding this explainer helpful, please take just a moment to like, share, and subscribe to our channel. It really helps us make more content just like this, and that way you won't miss any of our exciting updates.
Okay, so it looks like we've solved the mystery of the recent price surge. But you know what? Our investigation isn't quite over. Now we have to look ahead and ask the important questions. What does all this mean for the future? And what are the new risks in the silver market?
And that brings us to the million-dollar question. All that silver that got moved to the United States to avoid those tariffs, is it ever going to go back to London? Because if it does, the squeeze could ease up. But what if it stays put?
Well, history might give us a pretty good clue here. A very similar thing happened with gold not too long ago. You can see it in the chart on the right, gold was moved to New York vaults for the very same tariff fears. But here's the thing, even after everyone was told that gold was exempt from the tariffs, the gold never went back. If silver follows that same pattern, this low supply in London might just be the new normal.
And just when you thought it couldn't get any more complicated, a brand new risk has appeared on the horizon: China. China is a major exporter of silver, and it's just brought in some new controls on its exports. This could really break up the smooth global market we're all used to.
It might even cause different countries to start hoarding their own supplies, which would make global shortages even more likely.
So, after all our detective work, what's the final verdict? What's the outlook for the silver market after such a chaotic time?
Well, the main takeaway from that Goldman Sachs report is pretty clear. The conditions that created this great silver squeeze, they haven't gone away. They expect these wild price swings, and notice they say both up and down, to continue. So, for investors who don't have the stomach for that kind of thing, the message is pretty simple. Be cautious.
And all of this leaves us with one final, really fascinating question. For generations, people have looked at silver as a stable, safe investment, a safe haven. But with global supplies breaking apart and the market being so sensitive, has it turned into something else? Is silver still that safe haven we all thought it was, or has it become more of a wild ride? That's something every investor is going to have to think about.